I would describe it exactly that way. I think you had two wrong decisions, then we had the right decision. I think the first wrong decision was Elon turning down the deal with the SEC. That deal allowed him to remain as the CEO, which to me was the most important factor. Then after he turned it down, the SEC made a subsequent wrong decision in that when they brought the lawsuit against Elon, they expanded or backed off of their deal, which is proper posturing, but not in this context where Elon would have to step down as CEO. So I understand the posturing from the SEC from a legal point of view, the negotiating point of view, but the SEC's first mandate is investor protection. And by threatening to remove Elon as a CEO, the investors suffered that day, as you well covered, over 15%. So I think they should have eliminated that posturing. The good news, though, they came to the right decision. Elon remains the CEO. He obviously had to pay a penalty. He did not handle the FD requirements properly, and we go on.
But what do you do, Bob, when you have arguably a company where you have vision coming out of your ears, right? You just vision to go around, and execution is always just trying to sneak enough in to make the quarter. What do you do in a situation like that?
Well, first, you've got to make sure you understand it's the purview, the responsibility of the board to look after that. So clearly, Tesla is a company with great vision. Do they have great execution? We don't know. That's the purview of the board. It's not the purview of the SEC. So clearly, that's for the Tesla board to think about and really act upon.
Bob, what grade do you give the Tesla board thus far in dealing with this situation? I mean, they seem to struggle to rein Elon Musk in when it comes to his tweeting. They didn't seem to be able to get him to take this settlement the first time around. Now they're about to get a couple new independent directors, but backward looking on this incident, what grade do you give him?
Well, I certainly think with respect to the decision to turn down the initial settlement, that was an F. Right, that settlement should have been taken. Elon would have remained as the CEO. Right, with respect to what pressure came after that and the quick response we saw on Saturday, you'd have to say the board sprung into action. I don't know, but clearly that was a quick response and driven obviously by the market fall off, on Friday.
But Bob, it seems that some lessons have been learned by Tesla, by Elon Musk, or Phil LeBeau, explaining that they filed an SEC filing as a result of an email that Mr. Musk sent out. And that was the first time that he could remember them ever doing that, sort of being responsible to their shareholders.
Well, that's positive progress, right? People can learn, and Reg FD is a real issue for public companies.
Bob, I got to get your take on GE. Obviously, Flannery out, Culp is in. We got the non-cash charge on the power business, withdrawing the guidance, and then today, Moody's putting them on watch for a potential downgrade. How do you view them right here?
So I would say two things. One, GE is obviously a battleship, and 13 months to turn around a battleship seems like a very short period of time. Now, we obviously don't know what went on with respect to the execution, so that's an outside-looking comment. But the other comment I make is I have a fundamental issue with board members stepping in as the permanent CEO. It really kind of perverts the role of the board member to provide advice and counsel to the CEO. And what's remarkable to me, we talk about the 13 months that the ex-CEO is in place. The new board members and lead independent directors are there for 7 months. So for them in that 7-month period of time to understand exactly what's going on and a board member to say, yes, I can run this whole thing, seems a little unusual to me. And I think, you want ex-CEOs on the board, but in a real sense, those ex-CEOs should say, I'm not here for the CEO's job and make a commitment to that. Because once that elephant is in the room, it's a different dynamic, and it's not the proper dynamic between a CEO and its board.
Interesting. But given the urgency regarding the restructuring, what would have been the better alternative? I mean, arguably bringing in an outsider would have taken them even longer to get up to speed. Would you have gone with someone from within?
So, we're not on the inside, so I hate to just make these random guesses, but I think, outside the GE, right, when you have a large company, when you hire a new CEO, it's going to take a while for them to change that organization around. They do not have a magic wand. I have no inside information what happened at GE, but 13 months from the outside looking in, seems a very short period of time. And for new board members, 7 months in, to properly discharge their responsibility to the CEO in that period of time, that 7 months, seems incredibly quick to then know the organization, know the CEO, and then say, okay, I should take over. So my biggest point, though, is board members should not try to become CEOs, because then they cannot, in that period of time, effectively function as a board member and provide advice, counsel, and guidance to the CEO.
So, Bob, quickly, it seems like the cases when this happens are quick CEO ousters. I think of HP, Meg Whitman coming in for Leo Apotheker. I think of James Hackett coming in for Mark Fields, Etsy recently. Do you think the succession planning, or perhaps Plan B, should be further developed so that they don't feel like they have to pull on somebody they know from the board to step in?
Yes. When you look at the responsibility of the board, they get to hire and fire one person. That's the CEO. With that power, they have to know that they have to have a succession plan in place. So the Nasdaq board, to give them great credit, always in every meeting pressured me to make sure my successor was being trained. Adina Friedman was trained for the better part of a decade, and you see the phenomenal success she's been since she took over.
Yeah.
That's a result of the board forcing that discipline over a long period of time. So the board always has to be in a position to, one, have the confidence in the CEO and have an active development plan for the successor CEO.